Welcome to this week's episode of our Forex podcast. Today, we're breaking down what happened in the currency markets over the past week and diving into what might unfold in the week ahead. Whether you're a day trader, a long-term investor, or just keeping tabs on the financial world, you'll want to stick around for this one. Recap of this week's Forex market. Let's start with the big events that shaped this week's trading action. The US dollar saw some major swings after the Federal Reserve released its minutes from the last FOMC meeting. While policymakers remained cautious about inflation, there were hints that rates might stay higher for longer. This news pushed the dollar index, DXY, up earlier in the week, but profit-taking brought it back down by Friday. Meanwhile, the euro faced pressure after weaker-than-expected German industrial production data. Investors were spooked by signs that Europe's largest economy might be slowing down more than anticipated. Euro to US dollar dropped below the key 1.08 level but managed to recover slightly by week's end. On the other hand, the British pound found some support after the Bank of England governor hinted at more rate hikes if inflation stays sticky. Pound sterling to US dollar ended the week near 1.25, as traders balanced the BOE's hawkish tone with concerns about slowing UK growth. Commodity-linked currencies had a mixed week. The Australian dollar struggled after a dovish statement from the Reserve Bank of Australia, while the Canadian dollar got a boost from rising oil prices. Speaking of oil, WTI crude closed above $82 a barrel, providing support to the loonie. The Japanese yen continued its losing streak against the greenback. With the Bank of Japan maintaining ultra-loose monetary policy, US dollar to Japanese yen pushed past the 150 level, raising speculation of potential intervention by Japanese authorities. Key market drivers for next week. So, what should we keep an eye on for the week ahead? Here are the major events and trends likely to drive Forex markets. US CPI Report. The U.S. Consumer Price Index is due out on Wednesday, and it's expected to set the tone for the dollar. If inflation comes in hotter than expected, it could fuel expectations of another Fed rate hike, giving the greenback more momentum. Conversely, a cooler reading might ease rate concerns, putting pressure on the dollar. European Central Bank, ECB, meeting minutes. Traders will be combing through the ECB's meeting minutes for clues about the bank's future rate path. The euro has been under pressure lately, and dovish signals from the ECB could push it lower. However, any hawkish surprises might give euro to US dollar a much-needed boost. UK GDP data. The UK is set to release its GDP figures for December, and this will be a key test for the British pound. Strong growth numbers could reinforce the BOE's hawkish stance, while disappointing data might drag pound sterling to US dollar below the 1.24 level. China's trade data. For those trading the Aussie and Kiwi, China's trade numbers will be critical. Australia and New Zealand's economies are closely tied to China's performance, so weaker trade figures could weigh on Australian dollar to US dollar and NZD/USD. Bank of Japan's policy updates. While no major announcements are expected, any commentary from Japanese officials about the yen's weakness will be closely watched. If the yen continues to depreciate, intervention rumors could grow louder. Forecast for major pairs. Euro to US dollar. Looking ahead, euro to US dollar may struggle to break higher unless we see stronger European data or dovish Fed signals. Support lies near 1.0750, while resistance is around 1.0850. Pound sterling to US dollar. The pound could remain range-bound, with traders waiting for UK GDP data and more BOE commentary. Key levels to watch are 1.2400 on the downside and 1.2600 on the upside. US dollar to Japanese yen. With the yen under pressure, US dollar to Japanese yen might test the 152 level next week, especially if US inflation data supports dollar strength. However, any signs of intervention could trigger a sharp pullback. Australian dollar to US dollar. The Aussie looks vulnerable to further downside, particularly if China's trade data disappoints. Support is at 0.6350, with resistance around 0.6450. US dollar to Canadian dollar. The loonie's strength could persist if oil prices remain elevated. Look for support at 1.3650 and resistance near 1.3750. Final thoughts. This week's Forex action will largely hinge on economic data and central bank commentary. The US CPI report is the big one to watch, but don't overlook the impact of geopolitical developments or unexpected news headlines. Remember, the Forex market can be unpredictable, so managing your risk is key. Stick to your trading plan, use stop losses, and avoid over-leveraging your positions. That's all for today's episode. Thanks for tuning in. Be sure to subscribe for more weekly updates and insights. Let's make the next trading week a profitable one. Until next time, happy trading.